Welcome back, everybody. Hope everyone's enjoying their Wednesday. Got a lot of exciting news to cover today, including the very exciting news that a crypto TV station might be hitting the airwaves soon. It's pretty interesting. First, don't forget to hit the like and subscribe button if you enjoy the content, and remember you can always skip around using the timestamps in the description area beneath each video. Let's begin. Markets, 29,000, down 3% from yesterday. Seeing a lot of this. It's really beginning to look like 30,000 is that floor price, the equivalent of 6,000 in 2018. Prices are just going to kind of dance above, dance below, no major swings, and the market's really just deciding which direction it wants to go in. Green fear up to 12 was at 8 yesterday, so even though this looks like kind of a menacing headline here, extreme fear, it's up. That's a good sign. Elon Musk, he isn't so good news. He says the U.S. is probably in a recession in the last 12 to 18 months, probably closer to 18 months. He says recessions are not necessarily a bad thing. He's been through a lot of them. Said the boom and bust cycle, you get misallocation of capital, money starts raining on fools. I would have to agree with this. This is how it works. Once the boom cycle starts, too much money comes in. It goes to good projects and bad projects. The bad projects get flushed out. Money goes out of the ecosystem, people leave the ecosystem, but the excitement, interest in the crypto ecosystem or tech ecosystem never really goes away. So a couple years go by and then everybody gets back into the industry and more money comes in and another boom cycle starts. That's how it works. In crypto, it seems to be around 4-year cycles. These crypto analysts were a little more positive, though. They're trying to note there are parallels between the current market conditions in crypto in March 2020, the pandemic month. Of course, Bitcoin fell 45% in a week that month from 7,900 to 5,100, and this mirrored huge losses of 7.6 trillion in the tech markets. And then obviously soon after that, bull market started, prices really turned around. Unfortunately, this would be great if this is great news, but unfortunately there's a key difference. At that point, we'd already been in a long bear market. It had been about 2.3 years since we hit our peak in 19,000 in December 2017. So the market was just ready to turn around. Right now, it's only been 6 months since we were at the $69,000 peak. But yeah, between prices hitting 19,000 in December 17th in 2017 and the amount of time it took to get back to that 19,000 threshold, people don't realize it was 3 years. It was 2 years and 11 months. So it took a full 3 years to get back to the previous high. Right now, it's only been 6 months. So let's hope it doesn't follow the cycle. But if it does, that's another 2.5 years until we get back to 69,000. Who knows? I think that previous headline was probably a little too optimistic, but maybe I'm wrong. Tether losing ground to USDC on redemptions. Now, I think it's going to really turn into a Coke and Pepsi battle here, Tether and USDC coin. Almost neck and neck here. They're number 3 and 4 in total market cap. 74 million market cap for Tether, 52 million for USDC. USDC has gained a lot of market cap recently, whereas Tether shed about $7 billion in market cap. So they're getting pretty close. And as I've said, I think you have two pretty good options here. They're both reserve backed, so there's nobody can redeem these tokens for something else, which that's what basically caused Terra to cascade into a gazillion sales, which caused all the sell pressure. So that won't happen with these. And then obviously USDC coin is a little bit more transparent with their reserves, but Tether they have been around longer, test of time. They passed the test of time better. So I think you have two pretty good options. One key differentiating factor might be the USDC. That's a US-based company. They're owned by a Boston-based financial services firm, Circle Financial. So if, God forbid, both of these would go under, in USDC coin, at least, there's, it might not be everyone gets all their money back, but at least, it'd be an organized process, much more transparent. You're actually going to be able to get in touch with people from Circle Financial. The communication is going to be much better. Tether is a 13-person company with roots all over the globe. It's Singapore, Europe, U.S., they're everywhere. If that went under, you probably wouldn't even know who to call or which country would take over the investigation. So that could be a differentiating factor, but when it's all, I think they're both pretty good options, pretty much, and there's more than the guy making a lot of money here. There's, tons of room for two players, I believe. this came out a couple weeks ago that Tether, indeed, they believe in the history of the world, Tether has the highest market cap to employee ratio, 68 billion market cap and only 13 employees. Right now it'd be a $74 million market cap. So it just goes to show it's how crazy crypto is. $74 million market cap, 13 employees. It's name another industry that's like that. I mean, no wonder the Bitfinex execs have so much of their own money to play around with and trade with. They are some of the original founders of Tether. It's got a lot of money, anyone who was in on Tether initially. Moving on, Robinhood. So now they are offering two different products, a non-custodial and a custodial wallet. The news today was that they're releasing a non-custodial wallet. So this is if you do not want to have control over your keys. You don't want to have to deal with memorizing passwords, memorizing where your coins are, or if you lose it, then what do you do? So that caters mostly to institutional investors who just kind of want to trade, get into a position, not have to worry about private keys. Whereas the custodial wallet, then the users have control over the private keys. So if they lose the private key, it's a little unclear how much of it is insured by Robinhood. Probably nothing if the person loses their own private key. So that's definitely something to consider. You'd think most people would just automatically go with the non-custodial keys, but you know, if something catches on, it's not really like that. If something crypto caught on for a reason, so even though it's a pretty steep learning curve for the newbie to learn how to download a wallet and memorize your private keys and update the wallet and all that stuff, that's what made crypto crypto. So you're always going to have, particularly the retail traders, are probably going to prefer to have the custodial wallet. Least surprising news of the day, Terra's 3-person legal team has resigned in the wake of the Terra collapse. Not really a surprise, didn't want to deal with the fallout. Moving on, U.S. issues charges in the first criminal cryptocurrency sanctions case. So these were the sanctions where you can't send money to Russia or the other 4 countries on the highest level of economic sanctions. It's North Korea, Syria, Cuba, and Iran. So somebody converted 10 million of fiat to crypto using one of the U.S. exchanges, so either Crypto.com, FTX, or Coinbase, and then transfer the 10 million to, you'd assume, probably Russia, I'd assume, if they made a point to, charge this person. So probably Russia, I would assume. But still, you kind of not really sure what this person was. I mean, I think he thinks it's like a bank where businesses are every day they're kind of transferring $10 million to banks and back and forth. It's not really like that in crypto. I mean, FTX, Coinbase, they don't get $10 million fiat to Bitcoin transfers on a daily basis, probably just a couple times a year. So not really sure what that guy expected to happen, but good news. It's good that they're cracking down on the sanctions there. Moving on, the cover story of the day. So possible, I think this is more of a question of not if, but when, the crypto TV channel. I think it would be a great idea, just 24 hours, like Bloomberg, CNBC of crypto. This guy, Phil Fanconi, he's raising money for a crypto TV network. He comes from the hedge fund world. At one point, he was worth $2 billion. He, since then, has lost a lot of that on bad investments, and he doesn't really have a background in TV, so some people are a little skeptical whether he's the right guy for this. He could be, he could not be. Who knows? He hasn't said how much money he's raised so far. He hasn't said how much money he's looking to raise, but he has said he's aiming for a third quarter 2022 launch date. I mean, it's in a couple months. It sounds a little overly ambitious. Great if it happens, but he seems to think he's going to be launching this pretty soon. It's a lot of work getting a TV network. You programming 24 hours a day, especially if you don't come from the TV space. But yeah, I think at some point a crypto TV station, it's great. His name is Blockchain TV. I think like crypto TV would be a little better if that name isn't taken. I would like the focus to be a little more on the price movement, the trading element, the new coins, the returns, and not solely just on the tech element. You need a little bit of that, but that would cater much more to a niche crowd, whereas the CNBC, Bloomberg trading elements would cater much more to the masses. But yeah, I'd love that. I would have that station on my TV 24 hours a day if and when it does launch. Exciting news, Mike Novogratz, he has resurfaced after his week-long Twitter absence. So Mike was invested in Terra. It's unclear how much he and his company Galaxy Digital invested. It seems to be maybe 30, 40, 50 million, somewhere in that range. So not really that much that they lost considering their total assets, but that had turned into lots and lots of money, as we're learning. Terra was an extremely profitable investment for a while, so it obviously hurts taking a hit on the total amount of money that it had turned into. He has clarified that he did not, the company did not sell any of the Terra either before or afterwards, which makes sense. He had the tattoo of Terra. He was one of the more diehard Terra fans out there. He's also, he doesn't seem to think that a specific attack caused this, and I'm not sure if I agree with it, but he did say, you know, the macro conditions led to it, that the prices were already moving down, and then the yield on Terra on the Anchor protocol just increased from 14 to 15% to 18%, which means there was a lot of money flowing into there. So once it lost its peg due to that huge $280 million sell, then that just started a cascading effect that, you know, the market conditions were perfect for it to go to zero, whereas if the market was flat, it probably would have recovered. It would have lost its peg a little, but it would have recovered. He could be right. I still think it's a little coincidental that $280 million all at once in a 4-minute span and 4 separate transactions weren't loaded at the same time. If it was a coincidence, I'd say maybe over a couple days, not over a 4-minute span. Who knows? But I do agree with him that it was just seemed to be the perfect hybrid of different macro variables that enabled this, if it was an attack, to actually take the price to zero. So then, so Mike Novogratz did not sell any, so they took a big hit on that. And then CZ, they also took a big hit. They invested only $3 million in the 2018 round, which turned into $1.6 billion, and then they had not sold any at all, so that turned into zero. So. But then Pantera, they had cashed out 80% of their investments. They did not experience any significant loss, and they invested in the 2018 round, not the 2021 round. So it had been 4 years. Usually lockup periods for the pre-sale investment funds, it's usually a 2-year lockup, 1 to 2 year lockup. For a long-term project, it's going to be closer to 2 years. So yeah, after the 2-year mark, funds can do whatever they want. They don't. A lot of times they don't want to sell at the soonest possible minute, because then they get a reputation of just dumping the coins the first second they get. But, you know, 4 years, then funds can do whatever they want. Pantera had made the savvy decision to sell 80%, probably just for diversification purposes. I don't think anyone could have predicted that this would have turned out the way it turned out, but nonetheless, Pantera did profit from this. As, you know, good savvy investors. It was 560 times return. They specified that they'd put 1.7 million in, and that turned into 170 million. So similar to Binance size investment, it appears. That's it for today. I'll be back for a new episode tomorrow. Don't forget to hit the like and subscribe button, and I will see everyone tomorrow. Later.